The Australian dollar is on a roll. But here's the catch. It's not just about the AUD's strength. It's the US dollar's weakness that's making headlines. Let's dive into the reasons behind this intriguing currency dance. The AUD's rise, a data-driven story. Recent data releases from the Australian Bureau of Statistics, ABS, have given the AUD a boost. Private capital expenditure soared, surpassing expectations, and the Consumer Price Index, CPI, rose, indicating a healthy economy. This has the Reserve Bank of Australia, RBA, in a cautious mood, as inflation remains above their target range. But here's where it gets controversial. The RBA is expected to keep interest rates steady at 3.6% in December, despite the slight rise in unemployment. The question is, will they hold their ground, or will they surprise the markets with a rate cut? US dollars woes, Fed rate cut bets. The US dollar index, DXY, is taking a hit, trading around 99.50. Why? Well, the market is betting on a more accommodative Fed policy, and the White House's potential appointment of Kevin Hassett as the next Fed chair is fueling these expectations. Investors see Hassett as aligned with President Trump's preference for lower interest rates. And this is the part most people miss. The Fed's FedWatch tool suggests an 84% chance of a rate cut in December, a significant jump from just a week ago. Initial jobless claims are down, and the Producer Price Index, PPI, suggests stable inflationary pressures. But the retail sales and consumer confidence data indicate cautious consumer spending. Fed Governor Christopher Waller has expressed concern over the weakening labor market, stating that inflation is not a priority given the recent employment softness. New York Fed President John Williams and Fed Governor Stephen Miron have also hinted at a potential rate cut, with Miron going as far as saying he'd vote for a 25 BPS cut if his vote were decisive. Australian dollar to US dollar pair. Breaking barriers. The Australian dollar to US dollar pair is trading around 0.6530, and it's eyeing the 0.6600 barrier after breaking above the 9-day exponential moving average, EMA. The daily chart analysis shows a neutral bias, but the upward momentum is gaining strength. If the pair continues its ascent, it may explore the region around 0.6630. However, a retreat could see it test the psychological level of 0.6500, aligned with the 9-day EMA. A further decline could take it to the 5-month low of 0.6414. The RBA's role, a balanced act. The RBA's minutes from their November meeting indicate a more balanced policy stance. Board members signaled that they could keep the cash rate unchanged for longer if data proves stronger than expected. Assistant Governor Sarah Hunter noted that sustained above-trend growth could fuel inflationary pressures. But the central bank won't react to a single month of data. The bigger picture, inflation and currency strength. Inflation, traditionally seen as a negative for currencies, has an interesting modern twist. With relaxed cross-border capital controls, moderately higher inflation tends to lead central banks to raise interest rates, attracting global investors and increasing demand for the local currency. This dynamic is at play with the Australian dollar. Macroeconomic data such as GDP, PMIs, employment, and consumer sentiment influence the AUD's value. A strong economy and the RBA's interest rate decisions play a crucial role in the AUD's strength. Quantitative easing and tightening, extreme measures. Quantitative easing, QE, is a last resort tool to restore credit flow in the economy. The RBA prints AUD to buy assets, providing liquidity to financial institutions. QE typically weakens the AUD. On the other hand, quantitative tightening, QT, is the reverse, undertaken when an economy recovers and inflation rises. QT is positive for the AUD. So what's your take on the AUD's recent gains? Do you think the RBA will maintain its cautious approach, or will they surprise us with a rate cut? Let's discuss in the comments and share our insights on this fascinating currency journey.